Welcome to the latest episode of the QuantCom MoneyWise podcast. I'm George, your host, and I'm thrilled to bring you two upcoming episodes that shift our focus from investments to real-life businesses. In today's episode, I'm joined by Sam G, owner and director of Manning G Investments. I've had the pleasure of knowing Sam for about a year, and in recent conversations, we've delved into the challenges and opportunities of starting a financial planning business. In this episode, we'll explore these topics in greater depth, from navigating the complexities of business ownership and regulatory hurdles to addressing the pressures of industry consolidators. And we'll also look to uncover valuable insights into building and growing a successful financial planning practice. So thank you, Sam, for joining us today. And I just thought we'd start with a nice kind of easy question. Could you kind of give us a sort of brief overview of your background, your kind of career journey, and what inspired you to focus on financial planning?
Hello, George. Great to see you and be with you today. Thanks for having me on. It's been a long process, really. I actually started in financial services as soon as I came out of a sixth form, working in Bristol and West, what was the Building Society back in the mid-late 90s. And following that, I actually joined my family's business. So my parents were IFAs and they had a directly authorised firm. Over some time, I got the old FPC and became an advisor with authorisation in 2002. And over quite a number of years, I started really young. I think there was a big part of me that wondered whether I could advise effectively back in sort of 2002, 2003. But it really got me so much experience back in those times. And over the course of the next 7 years, I stayed within the business and built up my client bank over that time and really, really enjoyed it. My focus was always on investment business. That's what I really enjoy, and I continue to enjoy that now. But it was really around, back in those days, it was much more around investment planning as opposed to how things have evolved so much into these days. I think coming up towards RDR, my parents were looking to retire anyway, and I didn't want to take over their business because I wasn't totally sure at that time and totally comfortable of where I was going in financial services. But I did join another firm as an RI and remained an RI with two other firms, one in South Wales, one in Bristol, up until 2019. I think one of the things with that was that I always felt that I was shoehorning my clients into another firm's proposition. And that was the reason that took me on this journey as to where we are today. And I think looking overall of how things have changed, what it's gone from for me is investment advice to solving problems. And everything that I do these days is solving problems. That's not negative problems, that's positive problems. It's people coming to retirement, people with various different issues, and helping people is exactly what I love to do. And I get so much enjoyment out of working with my clients and making progress with them. And so we've gone from that older style IFA of being fairly focused on investment advice and other sort of basic planning around protection and things like that to really holistic financial planning these days.
You talk about your journey of being in a moderately sort of large, successful business, your parents' business, then becoming an AI. And you started Manning G Investments in 2020. And I guess the question that sort of comes up is, why set up your own business? Because anyone listening to this would kind of think, well, wouldn't it have been easier to go to a larger, more established firm? I know you talk about not wanting to shoehorn your clients into someone else's proposition, but that kind of would be a easier route. And then obviously you went down the route of being directly authorized as well. And so it'd be really interesting to kind of get your thoughts around why you took the direction that you did.
Yeah, of course. I think all of my life, I had an ambition to run my own business. And being an RI in another person's business didn't fulfill that ambition for me. And so I know there are many people who will go through their whole career as an RI in another business, whether that's employed or self-employed. And I did that for many years, having been a director in my parents in the later years to becoming an RI elsewhere. It was a case of not having total control of my business and my clients. And I really did feel that there was much more to what I wanted to do than just be an RI in another firm. I don't mean that in any negative way, because that suits many people. But for me, my ambition was to have my own business, look to grow a business organically, and becoming directly authorized seemed to be the ultimate position, the ultimate opportunity to make that happen. So back in 2019, I was having a lot of conversations. I wasn't totally happy in the business that I was in. And that really gave me the go ahead to look at making that application and just making some inquiries to see whether it was possible. And it turned out very early on that, yes, it would be possible. And so we went for it.
I know you started in probably a really, really difficult time, and I want to kind of come on to, I guess, the challenges of business owner, because I think one of the conversations we've had is that often when we talk about a financial planner, we assume that it's just about your clients. And I think the conversation we had was that it isn't just about the financial planning. There's compliance, there's finances, there's staff management, there's training. And I know from talking to other people that it's a real juggle. And I don't think people necessarily appreciate that. So it'd be really interesting to kind of, again, from your side, think about how you juggle this, what you feel are some of the biggest challenges, and perhaps system strategies that you felt have helped and may help others in managing these different responsibilities.
It's always been and always will be a work in progress. So going back to the days of looking at going directly authorized, I did ask a compliance consultancy firm to give me a hand with that process, with the application, and that gave me an initial idea of everything that needed to be done. But I was very much learning from scratch. So we received our authorization in January 2020. It was just me on my own. There was nobody else within the business. I was running the business on my own. So it was really like I always had been, but with the responsibility on myself, including all those FCA returns and things like that, which until you actually do them, you don't really know what they're like. Or that was certainly the case for me. So over the course of my first year, even with COVID hitting, I knew there was a real need to start to build the propositions in the business. I really wanted to take on my first member of staff to assist in running the business and making progress there. And that's really what we've done. But a lot of it has been learning as we go along and making progress that way. So it's been a very interesting journey. I do feel that over the 5 years that we have been authorized, that I've learned a lot, and there are things that I would have done in a different way had I known 5 years ago. So over that time, I'm not looking to grow my business in terms of staff and, get masses and masses of clients and, eventually become a consolidator or anything like that. That's absolutely not our aim. The way that we build business is through typically referrals, which is very typical in financial services, that referrals give you great opportunities, and that certainly is the case. But I now feel that after having done this for 20 years, I'm at the point where there is so much coming in, having leads and referrals constantly, that we built the business. So we're now a team of 5. And that is taking a lot of my time away from just the client side, which I always knew would be the case, because having my own business, I had no hesitation that there's going to be far more to it than just managing my clients. But that's what I wanted. That was my ambition. And that's where I am now. And I'm thoroughly happy with it. But that doesn't mean that I don't have some very big challenges or some sleepless nights. When I've been building the team, which has been a slow process, it's taken 5 years to get to a team of 5. I've been really thinking about what we want to do and how we want to do it and how to make progress while being as compliant as we possibly can be. Because even over the last 5 years, there's been very many changes with consumer duty and everything coming in around that. And so there is only so much time in the day, and there is only so much time that I can put to all the different things that I do. So over that period of time, I've built the team up, given responsibility to different people. And that's ultimately how we are making progress today, by having that team that works well, I am very much still learning. I'm very much still making things work in the best way that I know, but with the help around me to get some great opportunities there. So I think in terms of compliance support, that support is still outsourced, but we do have compliance support within the team as well, which has totally changed the business. I mean, it's very well having an outsourcing company to be there when you need help or to help you with, specific things like regulatory returns and things like that. But we've actually brought it within the business in addition, and that has changed the business over the last 12 months. I think that has been the most dramatic change that we've had over 5 years. But in terms of systems, we're very technology based, and that's what I love. I love to streamline things. And so we do make good use of technology within the business to make things work as best as possible. However, my own opinion is that I think financial services is still 5 years away from very, very good joined up technology to help us and ultimately to provide a great service to our clients.
One of my questions was going to be around technology, so you've kind of taken a steal on that one, which is great. But there's often this fear, isn't it, that technology is about competing with your expertise, whereas I kind of feel with you that you see it as complementing. So do you see that technology is a danger to you, or do you actually see it as complementary?
Oh, it's absolutely complementary. I never see technology as a danger. Technology can help us be efficient and provide us with some great opportunities to service our clients. And technology is something I love anyway. I'm not saying I'm an expert at it, but I can pretty well work my way around things. And so since setting up the business, we've got a client portal, which it's nothing of great excitement in itself. But when people have joined us, they have seen the total differences from firms that they've been used to, where everything has been paper-based and wet signatures and things like that. So from a very simple point, the technology has really improved some efficiency within the business and made our lives easier, and ultimately made our clients' lives easier because they're not inundated with paperwork and wet signatures and everything like that. We are doing well in that basis. But that is only one very small area where technology helps us. So in terms of our central investment proposition and our central retirement proposition, we are using some fantastic technology. We've been one of the early adopters of a system called Fintegrate, which really does run our central investment proposition from beginning to end. So for any client where our central investment proposition fits, we can go through the whole advice process from beginning to end in terms of investment and pension and make that work really, really well.
It's interesting because when you talk about the complementary way that technology can work and the systems you use, one of the things that often comes up is this argument of cost versus value. And many assume that the FCA are focusing on cost. My view is that I think they focus on value, and the two are almost two separate elements. So it would be interesting, because I know that we've spoken about and talked about this, but it would be interesting to talk about how you define your kind of value proposition. And then I think often financial advisors find it difficult to articulate how they might be different to another financial planner, and perhaps kind of maybe share an example of where your approach has provided that clear value to a client.
I think cost and fees and investment charges is always one of those things that creates debate on LinkedIn and many other places. And I think there is a real need to consider costs of what we're providing, whether that's product charges, investment charges, and advice charges, and what value those things are giving to our clients. So first of all, we are really advocates of low cost investment, and I'm a real fan of that, and it works well for our clients and has worked well for our clients for many years. And I don't have any inclination to change that in itself. So we are looking at getting low cost for our clients in terms of the products and the investments that we might be recommending to them, because that's what we feel is best, and clients are aware that that is our proposition. I think in terms of the service that we provide, I mentioned earlier that in the older days, my sort of early to mid 20s, we were looking for people that had cash in the bank and could they invest it. And ultimately, that's might be where we would make our money, because we don't do any of this for free. But these days, none of my business comes from that. All of my business comes from people coming to me with an issue of some sort, a positive issue, or maybe even a negative issue. And within our business, we do cover quite a wide range of things, from equity release to retirement and inheritance tax. So even in 2024, I've attended court for a possession order for a client who was having some real difficulties. We managed to save their house. And I think the ultimate business that we are looking for, so my favorite business, is that longer term, leading up to retirement type client. And those are the clients that are coming to us. They're clients who have a need for help from us to give them a positive overview of what their retirement is going to look like. And obviously we charge fees for the work that we do. And those fees aren't always cheap, because this is financial services. The costs of running this business are pretty hefty. And so we do have, ultra low cost propositions in terms of the investments and the products. But when it comes to the fees, I wouldn't say that the fees are particularly low. But what we're providing is that security and safety and knowledge to the client that makes those fees and gives clients total peace of mind. They're very happy to pay the fees that we charge, because they know exactly where they are. And that's what they've come to us for anyway. So we don't have an issue with that. Everything that I do is around solving problems and making things work for clients. And that's what I love to do. And the results that we get by clients being happy and clients staying with us, I think really helps to prove that point.
I guess this kind of jumps forward to another question I was going to ask further down the line. It was around kind of pushing on this point about value, articulating it. And I know that you kind of touched on that right at the start, and you've touched on it in there, is that I think in the past it was very much about investments. And I come from a background where I guess we saw our value as investment management, whereas that's now shifted to this kind of broader financial planning. And I guess the way you talk about it is solving problems. My question to you is probably twofold. Is, I guess, how do you kind of communicate that you're problem solvers, or, positive, negative, however you want to see that? How do you feel that the industry dynamics are shifting? Because I think there is a shift, isn't there, from this kind of old school, it's about investments, to financial planning, problem solving, however you want to wrap it up. So how do you feel those dynamics are kind of changing?
I think, first of all, there is so much opportunity for people to DIY their finances these days. There's, we see adverts all the time for compare the market and do it yourself type opportunities, whether that's insurance, investments, or pensions, or whatever. And that is absolutely fine. People can certainly do that. And I'm sure there are very many people who do a great job for that. Those are not the clients that come to us. The clients that come to us are people who just don't know what they're doing. And that is where we can really add value. Because I think, going back to the earlier point of, we're looking for, people with cash in the bank and looking to invest it and give them some investment return. Back in the old days, that's exactly what we would do. But these days, that's not what people are coming to us for. No one is saying we've got 100,000 or 500,000 in the bank. What do we do with it? This is where we are. This is what we want to do. It's much more goals based. And that is where the investment proposition is just one smaller element of the overall service that we provide, as opposed to the investment proposition being the service that we provide. And I think it's that peace of mind and security that my clients are looking for. And that's what they're getting, because they can see from beginning to end that in the service that we provide, whether that's in the beginning or our ongoing service, that they are getting peace of mind, know where they are, and know ultimately that their money is going to last where that is the case. I think that's the key difference for us in terms of how we have evolved over the last 10 years, or how I have with my clients. So my clients, even though I've been in different firms, I've been able to retain my clients. So my oldest clients have been with me since 2004, 2005, and they are still with me now. And, I think One of the differences in my business is that we are not just fully focused on that high net worth client. That is probably different to the normal IFA. I'm not totally generalizing, but what I hear is IFAs are looking for that 250 or 500,000 plus of assets to advise on. That's not really where we are. And actually, the bulk of my clients are sitting, below the sort of 300,000 level. But we can provide them with a service because actually it's those clients that do have possibly an even bigger need than those high net worth clients who are reasonably financially secure. So I think that's an area that we are happy to deal with where other advisors very clearly aren't. Where we do have people who are coming to retirement who have, maybe £100,000 of assets, we can provide them with a service. And just going back to that point of technology earlier, it's technology that helps us to provide that service, but still keep us profitable because we can provide that service to those clients that need it. Of course, I do have clients with well in excess of £1 million of assets that we look after for them and we advise them on in terms of their overall planning. But really, everything that we're looking to do is around helping the client, making their financial life work in a way that's good for them, and it's a lovely business then for us to run.
I guess it's these nuances, isn't it? Is that, and maybe this is where some financial planners do struggle, is how do you articulate, how do you make yourself different? But I think it's not so much about being different, it's about trust. It's about when someone meets you, it's, if you meet someone for the first time, you often know straight away whether there's a connection. And I think it's the same sort of thing, isn't it? So it's often once they understand what they're coming to you for, as you say, they've got a problem and you're there to help them. And I think, so I definitely think that's interesting the way you've looked at it.
Can I just mention something to you, George?
Yeah.
At this point, I think this is really something clear that gives an indication as to how we might work, and the relationship value that we have that is very valuable to our business as well. Back in 2020, someone approached me who was going for a medical retirement with a DB pension, and their medical retirement was approved, and we gave them some advice around cash flow. We certainly don't do DB pension advice and never will do that, but we gave them some advice around cash flow, and that was just a simple bit of planning that we did. Well, it was simple for us, very, very valuable for them, and it was a one-off piece of work. The other thing we did for them was a regular premium pension. Now, most advisors are not looking at a regular premium pension as being a source of good business. But in this particular case, they could really see the efforts that we went to in providing that service to them. It wasn't particularly valuable for us, but we went all out for them to make it work and give them the security that they need, which they now have, and they really do have very well. But what's come from that is that client has referred and referred and referred me. And I must have done £1.5 million worth of business off referrals from that one client that I didn't say no to. And that really helps to prove my point that we will look after those lower level clients, because actually the wider opportunity from that is very significant. And in this case, that is absolutely the case. But what I was going to say in terms of that, one of those referrals was another person who was coming to retirement. They had very, very modest incomes. It was husband and wife. They had a house with no mortgage. They had a very small DB, under £10,000, a couple of state pensions and a couple of small personal pensions and a bit of a lump sum. These clients asked me, they were a referral from that client that I've just mentioned. These clients asked me, can you tell us whether we are going to be okay in retirement? And I did the work for them. I spent the time doing it. I researched everything. I've got all of the data that we needed to be able to provide them with the advice, do the cash flow. And I went back to them and I noticed that when I said, based on what I knew in terms of their income and what they say their outgoings are, which did seem to be correct, based on what I knew, they were going to be fine for retirement. And these were people who don't live on very much. They have lower than average salaries, much lower than the UK average salaries, but they knew that they were going to be all right. And when the husband was told that, he had such a smile on his face. That meant everything to me. because he had that security. Now, I know quite rightly, there's many advisors that just wouldn't bother with that sort of business. And that's fine. I totally understand that. But for us, we've helped that person, we've helped that couple. It has given us profitable business because we have charged fees that do cover the costs of running that. And what that's done is that's made two of our clients really happy because they have that concept that through retirement, they are going to be okay based on what we know today. They know that we will review that. They know that we will look at that over the next year, and we will keep bringing that back into their plan and making sure it works. But that was so good for me. And I put a post about that on LinkedIn just to say that, I gave that example, and I say that we are happy to work with people at this level, because if we can help those people, that's fantastic for us. Even it's not going to make us loads of money, George. I totally get that, but I'm really happy to help those people who have a real need. One thing that's come from that is comments from other advisors. Some of them not necessarily on the post. Some of them have come in directly, and the comments have been, "How on earth can you do that? And why is that good business?" And do you know what? Maybe that's not brilliant business. If my aim is to make loads and loads of money, that's not a client for me. But if my aim is to help those clients and give them security and still make enough money that our business works, that's what I'm really happy to do. But what's come off that? Another referral and another really decent level of business from that too. And so I'm definitely looking for business. I do want to make money. I do want to grow the business, but we're not doing business for people because they are too low level for us. That's not the business that we are.
You've kind of touched on something that I think is one of the questions I've got here, which is around regulation. And my experience is that maybe it's unfair to say many, but certainly some people see regulation as a hindrance to business growth. And I do understand that. And you've got, I guess, wave after wave of new things coming in. So consumer duty, anti-greenwashing, vulnerability, thematic review of pensions. And ultimately, when you look at all of this, it is about the client outcome. And I guess what you see is that a few businesses will go through their client base and go, well, actually, they just don't fit with what we do. And those clients are removed. Do you think that adapting to these regulations can create a competitive edge? Or are you one of those who kind of feel that it is more of a hindrance?
I'm always looking to have a positive relationship with the FCA. And if we can have that, that's important to me. And when it comes to regulation and the things that have come out, consumer duty, anti-greenwashing, vulnerability, and all of those things over the last, a couple of years, especially, that does involve a huge amount of work for us as a directly regulated business, because it's not just me as an advisor dealing with my client, it's how we embed all of those things into our business and run our business in a way that complies with those regulations. So there is no question that those regulations and adaptations are a cost financially and a cost of time to me and my business. But I always treat regulation as positively as possible, that it is to get the better outcome for the client. And if there are ways that we can improve in our propositions, then I'm all happy to go along with those and view those things positively, as opposed to feel that they are a hindrance to the way that we move forward. So consumer duty coming in July 23 was a very big one for us. We're a small business, and that was a huge amount of work for us to do. And it's taken us about 18 months, I would say, to get that really embedded into the business. But we're now at the point where we know we are as good as we can be as it stands, but we will always be a work in progress. So I don't see regulation as an issue. I take it with both hands and move forward and make it work within our business as positively as I can.
It feels like a politician's answer. That's not being critical, but I think you kind of have to navigate it a little bit, don't you? got a couple of questions, or there's three more questions, but a couple of questions that I want to kind of focus on. One is, again, kind of looking at my background, and I know talking to one of my clients yesterday, they were sort of saying, "Oh, you're very much an active in terms of investment, very much on the active side." And I was sort of saying, actually, my view has shifted. Is that I still believe very much in active, but I also understand where passive comes into it. And I know that you tend to use passive or index strategies, particularly for those saving money, accumulation, and then you might use active for more specialist areas such as sustainability. Can you sort of provide your thoughts on this debate between active and passive, and kind of what criteria guide your decision to use active or passive? How do you look at it? Because there appears to be a very much a sort of confirmation bias that the only way to invest is through passive. So I'd just really like to kind of get your thoughts and feelings around that.
Yeah, absolutely. I'm a real fan of passive investments anyway, and I have been for a long time. Been using them and advising them to my clients for probably 11 or 12 years now, going from the previous active days, which pretty much everyone was at anyway, previous to sort of 2010, 2011. When I look at it purely on cost, I feel that over the long term, it is difficult to pick an active manager. I will pick the right active manager to get the alpha, to beat the market over the long term, year after year. So from my point of view, I believe that it is more a case of luck. Do I pick the right fund? Do I pick the right manager? And does the client get the benefit of that? Or do I advise typically a more passive approach, which is going to be cheaper because there is less work for the fund manager to do overall, and ultimately, over the long term, is likely to provide good results. They're likely to provide the market results. And if I advise an active manager, am I going to be in a position where I have to say, actually, yes, client, you have paid more fees and we haven't beaten the market anyway? Now, I know it's not as simple as that, but that's my very, very first point in terms of how I might look to create our own central investment proposition. However, I think when it comes to passive, a passive investment is a long-term investment. It's not something that is good for the shorter term. So there are clients who might be coming up to retirement and might need their money. They might be buying an annuity or whatever. A fairly adventurous passive 3 years towards retirement might not be the way to go, depending on exactly what the client's circumstances are. So as a business, while we really do advocate passive investment, there are times where passive investment doesn't fit that particular client. And so I've had a case very recently where the client has some very specific plans and very specific ideas where passive does work for an element of what he wants to do, but it doesn't work totally for what he wants to do. And so in that case, we will go off our central investment proposition and provide bespoke advice, which may include active, to provide exactly the right solution for the client. So I would say passive is that's what we do. That's what we do for the bulk of our clients. But in terms of active, we certainly don't discount that because there may be many other reasons than just cost and performance that active might be the way forward for some clients. So yeah, no issue with active. However, as a business that started in 2020, my aim was to grow the business further. And what I found actually is that low cost investment does attract us clients. And since 2020, we've done various bits of marketing around passive investments, and that has created a lot of interest. It's given us a very good number of leads, and we've managed to convert a good number of those leads into ongoing clients as well. So aside of the fact of what's good, active or passive, people are seeing more and more actually low cost investments might help them in the longer term, and that's providing us with clients. So I'm very happy to continue on that basis.
Yeah, that's great. I think that summarizes it really, really well. It's kind of, it comes down to the client, it comes down to what works, and clearly that works for you. One kind of final question before we kind of wrap this up is around consolidation. And obviously, I've come out of a business that was bought by a consolidator, and I think it's well documented that financial planners are older. Obviously, you're younger. Well, you're younger than me, so that's younger. So consolidation is one way for financial planners to sell their business. And I know you kind of touched on this a little bit, is that so a couple of my questions are: how does the rise of consolidators affect your business, and what opportunities do you see as unique to your business? And I think in answering those, one of the things that almost goes against, if you were trying to build your business to sell it to a consolidator, one of the things that goes against you is this idea that actually you'll help most people, you know, because if you're going to pick up somebody who's just got £200 a month going into a pension, it's not going to help you sell out to a consolidator. So, kind of thinking, having that in the back of my mind of what you've said, be really, really interested about, yeah, those two questions: is how does the rise of consolidators affect your business, and what opportunities do you see as unique to what you offer?
Consolidation is something that's been happening for many years now, and I get approached by consolidators a number of times a year asking for a conversation. And what I see as consolidators' role is generally to provide the best return for an owner of a firm to sell their business. And the proposition, dare I say it, might come secondary to that. Now, I have my own business. I won't be running this business forever. There will come a point where I might not want to do it anymore, or I can't do it anymore. In which case, what happens to the business at that point? I think in terms of my clients and the clients of the business overall, first of all, we have no intention of selling the business in the short to medium term. I am well over 20 years before state retirement age, unlike you. And because of that, selling the business is not my current focus. My focus is on developing this business and growing it and providing that decent service to the client. And if there are clients that come to us that aren't going to give value to when I might want to come and sell the business, that doesn't matter. That's not what I'm about. I'm about providing them with the service and being as profitable as we can be in doing that. I've known many advisors who have gone to consolidators over the last 5 years. And what I'm seeing in a lot of cases is that the consolidator, they may even say with a consolidator for a period of time, but what I'm seeing is that, quite rightly, the consolidator is wanting their proposition to be the one that the client uses. And so if that was my view, then I would be steering my clients more towards the consolidator's requirements so that I've got a business to sell as opposed to what my clients might need. So I have seen secondhand, people go to one of the big consolidators and propositions for all their clients suddenly change in the space of 6 months. So there's some question, I would say, on that, because what's the need for the change, and does that really benefit the client? I expect potentially it doesn't, but what it does is it gives value to a business that's going to be sold. It's quite easy for me to say I'm not on my high horse about this, because I know people have very different needs and very different requirements who own client banks or own businesses. Would I go to a consolidator or would I not go to a consolidator? I'm definitely not saying absolutely no, I wouldn't, but it's very important to me that my clients are looked after. And in that respect, we would only look to, well, I'm not looking to sell the business. I am very, very, very far off that. So it's not even something that crosses my mind aside of these conversations when they ring me up sometimes. But we would always want to give our clients the best opportunity of any change in ownership of the business in the future. So that would certainly be very much beared in mind. And it might be that as our business grows organically, that there will be people that can come in to run it, even if I'm not able to. And that's where the business could continue broadly as it is and make progress that way. But of course, there will be a point where I can't do this anymore and I will need to extract myself in one way or another. And I don't know exactly what that looks like.
And I think, kind of, as I come to this last question, I guess the unique opportunity for yourselves is that as these big consolidators kind of hoover up elements of the market and even other businesses, you're always going to be able to help those people who perhaps are missed by the market. So, kind of coming to the end and trying to wrap this all up, I'm kind of thinking that a really good sort of way to help people is that if someone was looking to set up a business today, and that's whether it's a financial planning business or something else, is there something that you wish you'd known before you started your business?
I don't think it's particularly easy to know everything when you start. And I have really learned so much as I've gone along. With hindsight, there are things that I would have changed, of course. I would have learned to manage people better. I would have learned to implement our processes better earlier on. But I think the reality of running a business is that you start from nothing and you learn as you go along. There's nobody that comes into a business and knows exactly what they are doing from day one with no change over 5 years. So we've adapted over the last 5 years in a very big way. And there are things that I might wish that I had known when I started the business, but I never would have known. I wouldn't have known those things. So it has been learning as I go along. Mistakes might have been made. We've seen just in simple things like processes and business management sides of things, we've seen things that, right, we need to do this better. And this is the way that we think we can do it. And so we'll test it and we'll implement it. But I think running a business and starting is always going to be a journey. And I think I'm happy to say that while we would have done some things differently, I don't think I would have changed the way things have gone because I've learned so much. So, yeah, it's been a wonderful 5 years. It's not been without its stresses and its sleepless nights. But would I change anything, or is there something I wish I'd known before? I don't think so. I'm quite happy with where things are. And knowing that I don't know everything at this point, and in 5 years' time, we can have the same conversation again, and my business will look quite different to how it does now. But overall, it's just a journey. I thoroughly enjoy it. I love helping my clients and I love working with the people that I work with. So all in all, really happy.
Thank you so much for your time today, Sam. I mean, it's been fascinating. And I guess the reason why I wanted to share this with my audience was really to bring kind of a real life story. It's a chance for you to talk about your business, but it's also a chance for people to hear about kind of the different challenges, to hear about how you view people, clients, and how you enjoy solving their problems, and not necessarily being focused just on how much money they've got, but actually, can you help them? And I liked at the end where you were talking about a journey within the business, but I guess it also follows into your clients as well. So yeah, really fascinating. And I thank you for that. Just for anyone listening as well today, if they'd like more information about Manning G, then please visit their website, which is mgi-ifa.co.uk, and there's more information on there. Obviously, you can go onto my website, onto the MoneyWise website, for more information about myself. So thank you very much for your time today, Sam. Thank you.
Thank you, George. Been great to be with you. Thank you.
All right. Thank you so much for listening.